right, thank you everyone for making it this afternoon. This is Tim Bukher, and he's going to be talking to us about applying the tech startup mindset to ICO evaluations. So let's give it up for Tim.
Hi everyone, thanks for coming out here at the tail end of the conference, so I won't keep you too long. I know everybody's rushing to fly home. Before I introduce myself and go into my bio, I want to just talk a little bit about what I'll cover today. I'm a securities lawyer. For the most part, I work with ICOs as well as venture funds, though ICO is sort of a dirty word, especially if you went to the SEC talk a couple of hours ago. Token sales, venture funds, hedge funds. My name is Tim Bukher. I'm founding partner of Thompson Bukher. We're a boutique law firm out of New York City, working mostly in the tech space. Specialties around securities, corporate law, anything that would support these tech companies for the most part. And naturally, we fed ourselves into the crypto space as it got more exciting, and because we have this IT background and are able to do it. This has become somewhat of a name drop industry, so I'll name drop and say we did the Singularity ICO, so suddenly you can all take me seriously. I'm hot shit right now. But in all seriousness, we have some really amazing coins here at the conference as well. My clients, which thank you for coming here to support me. I'm not going to shill you right now, but since this room is small, I do recommend that at the end of the talk, everybody just kind of network and talk to each other and find out about all the amazing things that everyone here is doing. I always include a trigger warning because I do some campus lectures every once in a while. Technically, since this is a McAfee event, I guess this is superfluous to a bit, but but let's go into Bitcoin. We had 2012. What did Bitcoin buy you? I mean, I'm exaggerating a little bit, but a shopping cart of groceries. 2013, suddenly the market thinks that it's worth more. And what is cryptocurrency other than just people believing that something is a store of value? What is any currency, really, if you think about it? What is the US dollar other than our collective belief that it holds some sort of value? Well, that belief came up in 2013. Suddenly the grocery cart is bigger. 2014, it's even bigger, and maybe you could buy yourself some booze. 2020, we're all going Lambo, right? That's all we hear on the telegram. And so we have this year, which is why I think a lot of you are here new to crypto investment. We have December and January 2018. Who made $1 million? Don't be shy. I don't think they invited the IRS over here. And then, of course, later in January, who lost $500,000? This is the market. It's consumer confidence completely driven by speculation. Why? Why is this happening? Why is the market going up and down like this? Well, I would say that 2018 is the year of regulatory FUD, basically. Fear, uncertainty, despair. That's the term they use on Telegram. January 23rd, South Korea bans anonymous crypto trading. Threatens a total ban. Suddenly investors are not so sure. Token holders are saying, should we keep this? Is this going to have value? What if major parts of the world are not trading this any longer? Market goes down. February 2, India signals ban on crypto, but says yes to blockchain. Interestingly enough, because I guess even certain governmental entities that usually are not very far-sighted maybe see some promise in the technology. February 5th, China threatens to step up the ban on offshore trading. Again, we have a market dive, slight recovery, dive, slight recovery. You may have noticed a pattern. Now, what are the regulatory positions? The UK may or may not regulate ICOs. The governments still are not sure. So currently, companies in the UK, sell them while it's hot. For the time being, it's do whatever you want. In the US, SEC and CFTC still scratching their heads. I would say in a menacing sort of way. That's my little joke, because they are kind of menacing to this space, to the extent that they are not telling us how to treat what is growing to be a major industry. So going into the actual regulatory agencies that will affect the values of your cryptocurrency, your token, your blockchain technology. The Securities Exchange Commission, SEC, where are they on all this? Concerned that crypto tokens may be securities, probably securities. Not really telling us how they decide what is a security. Still no formal guidance, no bright line rule. We are relying on a 72-year-old case, SEC versus Howey, to decide whether any given token that is issued on a blockchain is a security or not a security, and I'll end that with the caveat, maybe, because we lawyers don't give you straight answers. We say, there's a risk. You are maybe not a security. The SEC may challenge this. Here's a really good argument if they challenge it. Go ahead and bankrupt yourself fighting them in court. I mean, this is why the SEC has created quite a bit of uncertainty, and we're looking for guidance in the area. At the end of the day, it's all about optics. You look at some of the cases that the SEC has actually filed, some of the ICOs that it stopped, Munchie being the most recent. I would even personally say, taking a look at what they did, if I were their lawyer, and I would say they should have gotten a lawyer, I would probably argue that they were a utility and not a security. However, I think because they did not get a lawyer, all of their marketing material talked about them being a security for investors. Buy your token, grow your money. Nothing about the utility of their platform. So, of course, the SEC went after it. It's a warning. CFTC. Doesn't come up a lot, but important to the development of the blockchain space. How does it look at cryptocurrency? It might get a hard look. January, they talked about a heightened review of cryptocurrency transactions. February, they got together with the SEC and decided to follow a do no harm approach. Again, some forward thinking in government oversight. There may be, as we all know there is, a value to this blockchain, decentralized ledger technology. Suddenly, FTC and SEC decide, well, you know, in the 90s we took a do no harm approach and we got this thing called the internet. That was pretty good. Maybe we'll do that now and see how it goes. Another big agency, especially if you do have a token sale, if you're in the field and not just an investor, which obviously very important, you need the two, the Financial Crimes Enforcement Network, FinCEN. Where do they come in? They come in when it comes to compliance. We talk about compliance. We have some compliance vendors out there. This is your need for compliance. FinCEN is there to make sure there's no money laundering. That's our Anti-Money Laundering Act. FinCEN is really what requires you to know your customer when you're issuing tokens. So as investors, which I understand 70% of you are investors, when you shop around these token sales, you're going to be asked to provide names, addresses, where you are, possibly if the token sale is done correctly and in the US under one of the regulatory exemptions, you may be asked to provide some documentation to prove that you're an accredited investor. This is all your KYC. And again, it goes back to the optics. If you're looking at a token sale and you're looking at their website, you're looking at their platform, and it doesn't look like they collect the right stuff, right? If it looks like they're not asking for your name, they're possibly not checking your IP to make sure where you are located. They're not asking for the correct information. It's a good chance one of these regulatory bodies is going to come after them and shut them down. And I'd say a threshold question in deciding whether or not something is legitimate, because we know that thousands of these tokens are launched, every month at this point. And how do you decide what is legitimate and what is not? I'd say this is the threshold. So valuation strategies. I know you all came here to hear the lawyer talk about boring regulatory stuff, but I'm going to surprise you and talk about valuation strategies because, again, 70% of you are investors. And what my background, working in tech startup, brings to this is that I think, and this is due to conversations that I have all the time, late night drinking with my finance industry friends, when we look at these tokens, especially the newer ones, but they're all new, how do we decide their value? This is a brand new industry, right? Altcoins is mainly what I want to talk about at this point, because these are the things that are coming up that have a blockchain element to it that really allow you to do something. And I personally think, you know, when the bubble pops, which bubbles inevitably do, as it did in the 90s, a few key technologies will survive. You know, we had PayPal survive, we had Amazon, we had Netflix, we had well, Facebook, Google, major companies rise out of the ashes of a bubble burst. You're going to see the same thing, in my opinion, when the crypto bubble bursts, which may not be in the next couple of years. And you're going to see certain technologies, blockchain technologies, in my opinion, you know, decentralized ledger technologies that add value to the internet. It's your internet 4.0, whatever number we're at this point. But it's what will create a new sort of sector of industry that will add value to humanity, really. And so my theory, and this is not legal advice, is that altcoins are not securities. You know, despite what the SEC might say. There are no dividend rights, maybe something similar sometimes if there's a proof of stake or something like that. There's no voting rights usually, except, of course, sometimes foundations allow you to, you know, as token holders make some decision in the area that they go, but at the end of the day, it's not true voting the way you would if you owned a capital share of a company. But the main point is there is no equity interest. And this main point, I think, is what makes valuation so difficult. Because at the end of the day, you are not buying an interest in an existing company. You're not getting stock. You're not getting any claim on its assets. If it is a true utility token, as so many claim to be in order to pass scrutiny, then you're buying really a license to a piece of software, something that it does for you. How do you value a license for utility? Because personally, and I think my finance friends agree after all of our drunken discussions, the traditional financial models do not apply. To talk about some of them. You have the Berninsky model, which I like quite a bit. I'm not going to go heavily into it if you guys want to take a screenshot or ask me about it later, but basically just take a look at that link or just Google Berninsky. You know how Google works. I'll step to the side. You have your M, which is the size of the asset base, basically the value that you're looking at, and you derive it by multiplying the price of the digital resource, you know, times the quantity of the digital resource, basically your market cap, divided by the velocity of the asset. Each one of these has a complex definition. Take a look at the site. The point is, it allows you to estimate somewhat what the value of a utility would be. But I would say it's not enough, and the reason is this is a young industry. These tokens are super young, and really, how many have you seen that have actually so far delivered on what they claim that they will be doing? Some. Many have not because they won't, but because, again, they are young. They have not penetrated the market. When they've not penetrated the market, this is all nonsense when you say that, well, this is a disruptor of Netflix, and Netflix has a 2 trillion market cap, and maybe if this gets 50% of the market cap, it's going to be worth $1 trillion. It's nonsense. This early on, none of these valuations go. In fact, I would venture to say that if late December, early January, you saw an all-time high on some of the tokens that you held, possibly that all-time high might be higher than the actual value of that utility. It's a possibility. Not necessarily, but it's a possibility. Because why? I mean, this market is driven by speculation. It's what we believe the value to be. But at the end of the day, utilities do have values. At the end of the day, when the utility is used, people will decide, not the investors, but people will decide, well, how much will I pay to watch this YouTube disrupting video? That's the question. Metcalfe's law, really applicable to cryptocurrencies, not so much utility tokens. I wanted to put that up there because I wanted to be fair to all the different models. It was a pretty good estimate for Bitcoin valuation. Again, just Metcalfe, Google it. You'll get a sense of what it is if you're interested. This is my model. Momentum investing, otherwise known as the VC hard-on model, because I come from the VC startup industry. And what does it mean? It means that VCs are lemmings, which they are. I'm sorry to my clients. They understand my position on this, and I think they, for the most part, agree. They buy interest in a bunch of companies knowing that 90% of them will fail, hoping that the 10% in their portfolio will succeed. For the most part, how do they decide what to invest in? And I think you've heard this over and over again at the conference. 10% idea, 50% market, 50% team, 40% market. Really all this breaks down to is 100% FOMO, right? Fear of missing out. You see the other VCs investing in a particular technology that's hot, you will follow and invest in that technology. I think there's even a strategy that we use with our pitch decks with clients. All the VCs are into movies today. Relate your green technology to movies today, and talk about that. They'll throw some money at you for the most part. Why does a VC fund invest this way? They have no real interest in long-term management. They have no interest in sustained profitability. No real interest in operating in the black, really, in the companies they invest in. Exit is king. They want to make their money back. They want to make a return on their money. They do not care if after they make the return, the company does anything, really. So I'll leave you with this. Venture forth and hold until it's time to sell. At the end of the day, I'll say it again. Some of these tokens that have reached their all-time high probably were valued higher at that point than they will be when the utility is actually functional. So take a look at it. Not all. Again, I'll caveat, right? A lot of things have utilities that we don't even realize will be useful to the future. I mean, that's the beauty of this new technology that we have. This decentralized ledger is applicable to so many amazing things that I will not even begin to go into. And they will have true value, and these will be your Google, your Facebook, your PayPal. This is what will survive. But at the end of the day, as investors, because I'm addressing you as investors, you're going to trade. You're not only just going to hold the few that you think are going to be the Google, the Netflix, the Facebook. And as you're trading, keep in mind that a lot of what you're holding is probably worthless. And, caveat emptor. Obligatory disclaimer, since I'm a lawyer. These are my ideas, not my law firm's, even though they paid for me to be here. This is not legal advice. This is not investment advice. Take it with a grain of salt. If I mentioned any crypto assets by name, which I was careful not to, I'm not holding those assets. And at this point, I'll put this back up because this picture of me is awesome. And I will take questions. Please. Thank you.
When it comes to cryptocurrencies, what's your opinion on what would be the best way for the government to handle the situation in regards to it not really being a tenable thing for us to do to use it as a currency, considering all the tax implications of every single transaction being taxed and our own accounting? What do you think the government will do, and what do you think the government should do, whether it's 1 or 2 or 3 or 4 years from now?
Well, I think the answer to that question is, in fact, the answer to not just cryptocurrencies, but altcoins, really anything with respect to this technology. What the government should do is give concrete policy, as opposed to leave it to us lawyers to make an argument and then threaten menacingly to come in and cut the party short. And I'm going to use one of my clients' points that they made, which I think is beautiful. He said, you really got to invite the government to the party. If the government is standing outside the party watching us all have a grand time, they're going to get kind of jealous and call the police, right? Shut it down. So I think as entrepreneurs, and as investors, as anyone in the space, what we need to do is encourage the government to come in, partner up with us. You know, we talk about all these partnerships that the tokens have. Well, why? People should be trying to partner with the SEC, try to get them to understand the technology, try to get them to say something about the technology rather than scratch their heads, as I said, menacingly, and you know, give us lawyers the ability to overcharge you for Howey memos. Yeah. Yes, go ahead, back there. Yes, I'd say it's a. I don't think it's systematic opposition. Maybe sometimes when I wear my tinfoil hat, but today I think it's a level of misunderstanding about the technology. I talked to a lot of big law firms in the space, and they all claim to be crypto firms now because there's money to be made in this field, and most of these guys don't really even understand the technology. Surely the people at the SEC who've been there for years and years in essentially a bureaucratic position are not incentivized to be any more up to speed. So to some extent, education is important. Go ahead.
What are your thoughts on the 95+% of token sales that are failing the Howey test?
Well, I think that the ones that are failing the Howey test should not be selling in the United States because I'm a securities lawyer and an officer of the court, and I support the laws of this country. And at the end of the day, you know, people are going to sell what they're going to sell. They don't need to even sell in the United States for these tokens to get onto exchanges. I would certainly never encourage that, and I'm not joking about that, because I think that there is a real value to the Securities Act protecting unsuspecting consumers from making really poor decisions. But at the end of the day, yeah, if they're not passing the Howey test, they shouldn't be selling in the U.S. If they're selling outside the U.S. and you investors get a VPN to go purchase it, I mean, that's on you. You have to be wise about it. Go ahead.
So, in the last 1 month, I would have spoken to at least 6 to 7 security attorneys, and every attorney puts its perspective. I know some says that utility token is not a security, some says that it is a security. My point is that why SEC, CFTC come up with a clear guideline saying that, okay, this is considered as a security, this is a token, this is a utility. Why that there is no clarity?
I think the answer to that is the same as the previous one. It's an education issue. The SEC doesn't understand it quite yet, at least my opinion.
So then in that case, if the SEC doesn't understand, why the fault is on the investors and the people who are raising these tokens and securities?
I would love to speak for the SEC, but I can't. Please go ahead.
Maybe it's the same thing. A lot of countries allow to participate in ICO. Why US is banning most of ICO? Is that to protect investor or it is their own interest?
Ostensibly, it's to protect investors. That's why the U.S. bans a lot of ICOs that are securities. I mean, there's opportunity, and then there's also the opportunity to lose all your money. If you're paying attention, a lot of what you're holding is probably worthless. Some of it might be worth a lot. So at the end of the day, there is something to be said that more sophisticated investors can probably manage their money better. That said, not my personal opinion. I'll give you my personal opinion as a non-lawyer. I think everyone should be an adult and make their own decisions.
How we partner with SEC government to make this happen, right? As the citizens, what we can do?
Well, there are many ways that we could partner with the SEC. Some enterprising blockchain technology might decide to raise money to lobby, for example. I haven't seen that yet, but that would be a good idea. To some extent, it would do something good for the community at large. Some particularly popular technology might actually just reach out to the SEC and get a response because they're really popular, and the SEC at the end of the day is not immune to press. That's how we do it. We reach out. We attack the opportunities. We're entrepreneurs in here, right? At least we hope to be. This is an emerging technology. Certainly, we could figure out a way to approach the SEC. Go ahead. Yeah, and we pass information, and we can also seek no action letters, though, for nascent technologies that just takes too long at the end of the day, and also the fact patterns of any particular utility are just so disparate and new You're not going to get a no action letter that covers everything. What you need is actual rulemaking from the SEC. I mean, I've been sort of bullish and harsh about that, but it's mainly because, again, we're looking at a 72-year-old case to decide whether or not something is a security. Personally, I think that's untenable.
Would signature campaign help in this?
I'm sorry?
Signature campaign,
Signature campaign, I mean, I'm not a political activist, so I don't really know, but certainly I think to the extent that this technology gets mass adoption, I mean, the SEC can't ignore it, and it can't continue to, feed uncertainty. Go ahead.
I'm not asking for your opinion as a lawyer. Does it make any sense to you that the earlier they put a clear regulation in place, they can start to collect proper taxes and open the market to American investors in a proper way and collect the proper taxes and make it something more viable for everybody?
Yeah, I agree that the more the economy grows, the more the government can collect taxes. we're definitely all preaching to the choir here. At the end of the day, yes, if the SEC is actually clear about its guidance, we will know what to do and we will pay our dues. As many, by the way, hedge funds who invest in the crypto space do. They pay their taxes. I mean, everybody does. There's some uncertainty about how to pay certain types of taxes, especially if you're an ICO. That too. Go ahead.
I know that you are no politician, but at the level of government, what they think about Switzerland that are friendly with the technology, and Singapore, at the level of the country, what they think to be related or to be passed as USA always be the number one in the world in all fields. What they think about that?
I think that the U.S. is missing out on an opportunity by delaying. I mean, forget Singapore and Switzerland. I mean, Estonia is making out like a bandit on this, and it's actually passing proper regulations, and you can become an Estonian e-citizen and start a business there, and everything is like on the blockchain in Estonia right now. I mean, we are being surpassed by Eastern European bloc countries. Thank you very much.
Thank you, Tim. All right, thank you, everyone. Please sit tight. We're only going to take a couple minutes in between this presentation and the last one. And so next we have John Bush and Steve Mangum of Zero Waste Advocacy. So stay tight.